Hello, everybody, and welcome to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and their professional teams struggle to find great capital gains tax deferral options. Not having a clear plan is the enemy. Using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way to exit highly appreciated assets tax deferred so you can create, preserve, and grow your wealth. I'm your co-host, Pierce New York, filling in for Brett Swarts. And each episode, I'm joined by some of the best wealth, business, real estate, and leadership individuals in the world to share ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. We're also streaming on expertcresecrets.com, the Capital Gains Tax Solutions YouTube channel. So please rate, review, subscribe. It really helps out the channel. We really appreciate it. Today's guest is a wealth of knowledge in the crypto space. He's been in crypto since 2015 and launched a video production company. Back then, exited, and now is working with RDX Works. And so we're going to talk a whole bunch of stuff what's going on with the crypto markets and so on and so forth. So I'm super excited to have him on. His wealth of knowledge. Welcome, Adam Simmons. Adam, how you doing, man?
I'm doing good. Thank you very much for having me on. And hey, everyone who's tuned in live. Thanks for coming along.
Yeah, absolutely. So, Adam, real quick, can you just give like a 2-minute background on who you are and what you do?
Yeah, so I guess the easiest way to start is I'm a bit of a geek, bit of a nerd. Always have been, probably always will be. Joined, as you said, the crypto industry back in 2015 professionally. Prior to that, I was employee one for an online video platform in the traditional sense. I grew that to 35 million monthly active users. There was a big shakeup in the online video world with something called the YouTube adpocalypse. Go Google it if you're interested. But basically, one of many things that made us very jaded towards that industry and how it was run. And so back in 2015, I co-founded a project with some of my colleagues called Veracity, where we then went on and did an ICO in 2018. That's still running successfully today. As you said, I then exited that business and joined RDX Works, which is one of the core developers behind the Radix platform back 2.5 years ago now, and have been on a mission to really realize the vision of what Web3 can do for people like ourselves, our friends, our families, and our colleagues.
Awesome. So I want to just quickly pause here really quick and just what are 1 or 2 strengths or spiritual gifts that you have that have led you to be successful?
Oh, that's a really good question. So I've had a bit of I've always worked in tech startups, but a fun little fact about me was that in my first tech startup, I simultaneously, the same month I joined that company as employee one on the business side, I also joined the UK sprint kayaking team, the Olympic team. So for 4 years, my day was literally waking up at 7 a.m. to go to the lake, train, work for a few hours, have lunch, go back to my afternoon training, and then come back, work until the evening, sleep, repeat 6 days a week. And it was amazing how many transferable skills there were between kind of being an elite level athlete and also working in tech businesses and startups. You have to have the same determination, commitment, focus, routines, and really optimize everything you do each and every day. So I'm not sure if that counts as 2, but that's the strength that I think I bring to the space.
Yeah, absolutely. It just helps you, basically create discipline and drive. And so that's awesome.
Exactly.
Okay, so let's talk about real quick. What is, for those who don't know, what is the RDX Works and the Radix platform, and what does it do? What's its mission? All that kind of stuff.
So RDX Works is one of the core developers behind the Radix protocol. So Radix is what's called in crypto a layer 1 protocol. So similar to things like Ethereum, Avalanche, Solana, etc. So it's a place where you can, as a developer, deploy decentralized applications running on a completely permissionless decentralized network. Our mission is really quite simple, if lofty, which is to give developers everything that they need to obsolete traditional finance with a decentralized financial system. The way I like to think of it is, if you imagine the internet is like a global information layer, our goal is to create a global asset layer where we minimize the friction between any asset movements of any form globally at any time.
Okay, so you guys are basically a layer 1. Is it safe to say you guys are competitors with Ethereum, or are you guys running on the Ethereum blockchain as well?
So it is our own network. So we don't run on the Ethereum blockchain or any others. We have our we have an entirely full stack of technology, from the consensus layer to the execution to the programming layer to the user experience layer. All of that's built really to serve what we believe Web3 can be, in knowledge of what it was. So in some ways, I'd say we are a competitor to things like Ethereum. In other ways, I'd say we are still so ridiculously early in the space that it's like
Sure.
rising tide brings up every boat in the harbor sort of thing. I don't really view them as competitors. I think there's a bunch of really intelligent people in the space working on some incredibly difficult problems.
Sure.
Boldly, I just say I think they're working on not necessarily the right problems.
Awesome. So what makes Radix why did you leave what you were doing to go to Radix? Because it sounds like you could have gone anywhere.
Yeah, so I had a lot of opportunity and no real rush to go into it. And when I was looking around since exiting kind of my previous business, was what really aligned with some kind of platform mission. I like building platform businesses, so multi-sided businesses. I like the network effects within them, and something that has a lofty goal. And decentralized finance was starting to become a bit of a thing. And pretty much by chance, I discovered Radix. And what was meant to be a 30-minute phone call with our CEO peers ended up being about a 2-hour long call where I was just picking his brain. And what really swung it for me is I think it's really rare in life that you get to combine both something that you think is going to have a really big impact socially and in how we live our day-to-day lives, and also have huge pragmatic benefit. Usually you have to pick, go and work for like a charity for a great social impact, or go and work for like a petroleum company if you want to have a pragmatic use. With Web3 and specifically DeFi and with Radix, we're in that great space where you can actually do both, because I'm not one of those people who sits there and is like, crypto is going to like create a utopia. I think there's some trade-offs, just in the same way as the internet didn't create a utopia. But I think we can all agree that the way we share and use information today is vastly better with the internet than it was before. And I think crypto and Web3 specifically offers that the same for how we move assets around and how the financial system works.
Yeah, absolutely. So being your own decentralized platform where people can come and do the thing means that you guys are probably, not super for the centralized exchanges, since it's kind of the opposite of everything that crypto stands for and all that kind of stuff. So let's, the big news right now, right? FTX collapses, brings down, a bunch of other crypto, exchanges that are centralized that had a lot of control. People don't know where their money's going and so on and so forth. So let's talk about first a little bit about what's going on in that whole space for those who don't really understand it. And then, with the DeFi platforms, right? How are you solving those problems? And so that doesn't happen again, right? Because people are losing a lot of money.
So it's a really good question, and it's a really complex situation with what happened with something like FTX. So on a simple layer, they were using customer funds to fund other activities in highly leveraged positions, and sometimes very opaque conditions, to put that politely. And so as a result, when some of those highly leveraged positions didn't work out, they weren't backed one-to-one with customer funds. So when customers then realized that there was a problem, you had exactly the same scenario you do with the bank run, is people were starting to try and withdraw their assets. There weren't that many assets there. Suddenly they can't fulfill withdrawals. Now, I find it really interesting in many ways that people go, well, FTX is an example of why crypto doesn't work. Because as you say, centralized exchanges are kind of the antithesis to what crypto is meant to be about. A centralized entity controlling all of your funds is basically what the traditional finance system is. And having some black box doing God knows what with your funds, with your assets at any point, getting into stupidly over-leveraged positions with no transparency or oversight, has caused financial crises far outside of crypto on many previous occasions. Now, having said that, I think centralized exchanges currently serve a massive benefit to the crypto industry on the whole. And they're serving a need in the market. Like, let's be really pragmatic about this. Currently, the user experience for utilizing Web3, crypto, and whatever else isn't good for most people. It's highly complex. Self-custodying your own funds at minimum is terrifying, and is at maximum something no one really wants to do. Like, securing your crypto assets, you need like a hardware wallet. which again isn't expensive, but they're a bit clunky for the security. You've got seed phrases, which are 28 random words that you've basically are the keys to all of your assets, keep them safe. And like, you have to go to the level of like, if your entire net worth was tied to those seed phrases, what do you do? Well, you can't just put them on a bit of paper. What if your house burns down? Well, what if it's just in your house and someone robs you? Like, basically you get to the point of splitting up into 3 different places and putting it like underneath a volcano in 3 different continents to be really safe. But then that's completely impractical to go and access your funds. So there's this balance of like user experience. And so centralized exchanges fill that need. They're like, hey, we'll look after your assets and you can buy and sell them easily through us. And so it was user convenience. And I don't fault them for that. They're serving a market need. As an industry, and one of the things we're doing at Radix is really looking at all of these pain points. Why is Web3 and crypto, whatever you want to call it, why is it not solving the user need that the vision presents? Because I think it's not really a hard sell, the vision of crypto. Like, hey, your money, you look after it, you control it, you decide where it goes. Sure. No other people should be able to tell you what you do with your money, where it belongs, and when you can access it and where you can send it. It's not a hard sell. When you go to the practicality of that, like people watching this, like very intelligent people, financially savvy, sure, they're probably up for that challenge. Our friends, our families, our colleagues, our mums, our grandparents, whatever, are they going to do that? Probably not. I mean, my nan, love her dearly, she thinks the internet is Facebook. And so she's not going to sit there and be like, well, I'm going to go and do this. And then that's just holding funds. When you then go and look at interacting with DeFi and Web3 today, still, it's not a great user experience, because if you've ever used something like MetaMask, which is the most common wallet you use with things like Ethereum, if you go onto something like Uniswap, which is a decentralized exchange, for a start, what most people don't realize is it says, oh, approve Uniswap smart contract. So that's like the decentralized application to control your USDC, as an example. And you say, okay, what most people don't realize is that's usually a blanket authorization for that decentralized application to do anything with your balance of USDC. Because it's not actually in your wallet, it's in another smart contract, but that's getting a bit technical. Secondly, when you then say, hey, I want to swap my USDC for Ethereum or Radix or whatever, and you click go on the web interface, currently the wallet pops up and it says, hey, you're doing this swap. That swap, or it doesn't even say that swap, it says you're doing this transaction, which is presented as a hash. So for most people, random string of letters and numbers. Then tells you it's going to cost this much of a fee, approve or deny. And that's the only info you get. So you basically have to completely trust whatever the web UI said is what's going to happen. Because when you hit approve, it's what we call in the industry, you're blind signing. You're signing that and hoping for the best. You have no way to verify if it's true or not. That, again, is just one massive area where there's security concerns. Because 1, you could have a bad actor. 2, you could have bugs and exploits, which mean that you're approving the wrong thing. Or 3, you could just go to the wrong website and approve the wrong transaction without knowing. That's, again, insane. And that, again, isn't the fault of the developers. It's the fault of the entire stack, because the developer experience is also really tough, because Ethereum and Solidity is the most common way to build smart contracts at the moment. And it wasn't designed with the idea of assets in mind. So another thing that blows people's heads quite often is crypto, especially Ethereum crypto assets and many tokens are what are called ERC20 tokens. And so ERC20 is just the token is made with a smart contract itself. So a smart contract creates them and controls them. And the ERC20 standard is just a self-imposed standard. Like, we need all of these to look roughly the same. So things like wallets and applications can interact with the same kind of standard. The actual Ethereum network and every other network apart from Radix doesn't actually understand what a native asset is. It's just defined by a smart contract. That means that a developer has to, 1, create their own token if they need a token. They have to write these smart contracts to do that. And then they're interacting with potentially thousands of other smart contracts, which all have their own logic and their own way of rebuilding things. In Radix, one of the key differences we make is this concept of native assets. So the easiest way I can describe that to people is every layer of the stack, from the user interface through to the execution environment and the programming language down to consensus, understands what an asset is. So in the network, conceptually, a digital asset behaves exactly the same as a physical object would. So in that example, if I put a physical coin down on a table, it can't fall through the table, it can't disappear. If I hand it to you, while it's in my hand, it's mine. As soon as you take it, it's yours. It doesn't magically become 2. It can't. The rules of the universe say that can't duplicate magically. And little things like that make a huge difference to the developer experience. And the way I describe this to people is very similar to game engines. So those of you who don't know, like if you go back to the 90s, video games were really, really hard to make because you had to start by defining what the fundamental laws of the universe were in the game. How does physics work? Gravity, shadows, lighting. And that took about 80% of a developer's time. And it was hard work. And you still, when you went and reinvented the rules of physics every time, ended up with bugs. You fell through the floor, clipped through walls. And in video games, it sucked. It was annoying. And what people realized was actually every game needs these fundamental laws of physics. And so they built game engines. And when they built a game engine, suddenly developers freed up so much of their time to work on novel gameplay because physics were there. And say your game was in space. That doesn't mean that you can't go into the game engine and say, set gravity to 0. You could. That's the power the engine gave. And that revolutionized the industry. And video games became an industry that was bigger than music and TV and cinema combined very, very quickly because of the power of an engine. And that is exactly the same as what Radix gives Web3 developers. We give them basically a DeFi engine called the Radix engine to be able to build things. And then you get right to the bottom layer of the stack, which is consensus. Now, this is where when people hear about like high fees on Ethereum or congestion or slow transactions, mostly that comes from scalability. So scalability is like the number of transactions that a decentralized platform can perform per second. And so if you look at something like Ethereum, that does about 15 transactions per second is where it caps out. Even what's considered the best in the world at the moment in a live environment is Solana. Solana theoretically does 65,000 transactions per second, which is obviously orders of magnitude higher than Ethereum, but still a fraction of what you'd need if you actually moved even a fraction of the $400 trillion global economy running on there. Like Solana at 65,000 transactions per second couldn't even cope with, say, like NASDAQ running on it 24/7. So what Radix did, and Radix started back in 2013, we were looking at how could we solve scalability forever. And the way we did that is with a pretty novel approach to scaling, where we have a massively sharded environment, which, to put a number to it, about 2 to the power of 256 shards. And any of those shards can be combined together into a concept we call braiding, where they behave as a single shard while they're braided and then come apart. Now, this concept of sharding and braiding fixes one of the problems that other networks usually have by sharding, which is you then fragment information and there's a delay moving between those different shards, and you can't have something called atomic composability, which does a whole bunch of other cool stuff. But check our website if you want to deep dive on that. But like the big thing that Radix can do with this technology is when you've got that massive shard space, you're no longer thinking of, oh, we'll put some applications on one shard, some on another. You have so many shards that every single asset, every single fraction of an asset, every single wallet, every single dApp, every single liquidity pool could all have their own shards, and you'd still have more than the entire number of atoms on Earth remaining. And that means that since you can braid them together as needed, you can massively parallelize what's going on when they aren't related asset movements. And if they are related, so if I was sending money to you, for example, our 2 shards hypothetically could braid together to do that, and then split apart again when I go and transact with my mother-in-law or you go and transact with your lawyer. Now, then the only limitation is adding more throughput through nodes. And so this is kind of the other secret sauce, is you can then scale linearly, just like the internet. You just add more nodes, add more servers basically to that system, and more of that shard space can be processed in parallel. And so between that, our kind of top line is that full stack is what's really needed to achieve this benefit. You've got to revolutionize the way users interact with the system. You've got to revolutionize the way developers interact with the system so they can build more cool stuff. And then you need to make sure that the infrastructure basically powering that never blocks adoption or creates friction, just in the same way as the internet does.
Okay, so that was a lot there. So let me summarize.
Yep.
Summarize what you're basically saying. So essentially, kind of starting from the beginning, is the centralized exchanges are a necessary evil in some way, because the actual like usability and the actual, pragmatic way of interacting with crypto is extremely complicated and difficult, right? And so if you don't have a means of exchanging the crypto seamlessly, it's never going to become adopted. So we need something like that. However, they're using the wrong approach because you're essentially giving up total control over your assets and trusting that they're going. And you're still so new in the space that, because you don't have these templates, so to speak, already built out that people can just basically, leverage and build on top of. You guys are spending a bunch of time trying to do that. And so what Radix is doing, Radix is actually coming in and building the template, building the engine, so to speak, with the solutions integrated into it so that people can come on top of it and build a whole bunch of things. And a couple of things that you guys are doing that is different is you guys are creating different, what you guys called shards. It kind of, to me, when you were describing it, sounded almost like a DNA strand where they can like come together and like break apart and come together and break apart. And like the certain pieces fit together well. And then like, they can transfer information and then go off on their own separate ways. So you are basically creating a genome and sending it out all over the is that a fair?
Yeah, it really, really good summary for a first take. I'm genuinely impressed. Like a good way I describe it is internet browsers is quite an interesting way of thinking of it. So like an internet browser is like your user experience to access the internet. The internet itself, the infrastructure, is the equivalent of consensus. The browser is the equivalent of the user experience. And then something like JavaScript is the same as like the engine that makes the modern day browser experience that we get in the like online apps we have. And so far, very little of that has got a Web3 equivalent. And that is what Radix is trying to do so that we can have that same revolution that a global information layer of the internet gave, a global asset layer can give to how we move assets around.
Gotcha. Okay, so that's how you guys are different than some of the other ones. And it seems like they're layering on top of each other, right? Because you had Bitcoin coming in with the blockchain technology, right? And that's like, and then you have Ethereum coming in with the smart contract technology. And then you have, you have all these, they call them layer 1, 2, 3, and 4 kind of things going and building. Are you guys taking these different like technologies as layers and creating the templates as you go and just updating them? Or is that the big problem that a lot of people are facing is they're recreating the blockchain, they're recreating the smart contract, they're recreating all this stuff. And that's where the templates kind of come in and the engines come in for you guys.
Kind of. I say kind of because like there's the conceptual and the pragmatic way of building it. So like one of the approaches that a lot of other kind of smart contract platforms, layer 1s, layer 2s and take in the space take is they go, well, we'll copy as much of what already exists and then just fix one little bit. Sure. Now, the problem with that is if you take something like, let's look at Ethereum, the developer experience is one of the problems. The user experience is one of the problems, and its scalability is one of the problems. So some people go, well, we're going to make a better consensus, but we want to use all the network effects and stuff that's already been built on Ethereum and make that easy for people to port over. So we'll just take our consensus and put the EVM, which is the Ethereum virtual machine, and the user experience on top of that. Sure. Now, the problem with that is it's quicker to market, but you kind of end up in a situation of like trying to mix Lego and Meccano together. That they don't really understand each other, and some of these problems are not consistent to one layer. And so that creates its own problem. Now, sure, it's fast to market, and hands up, like Radix has been working on this since 2013. So it's a long slug, but the other problem that people like Ethereum had, there's obviously recently the Ethereum merge where they moved from proof of work to proof of stake. There's talk of Ethereum sharding in the future. That's always been delayed. It's because one of the amazing superpowers of crypto and blockchains is that they are immutable ledgers that exist forever. Now, the problem with that is, what if you need to go and upgrade it? Be like, oh, we didn't build that bit right. It's like trying to change a wing on a plane while it's mid-flight. You can't. You can go and build a new plane that's a better plane, but you can't go and change just one wing and be like, oh, we should have made that a bit longer, because you're going to crash and burn. And so that's why upgrading these systems once they're already in, it's really hard. And why Radix has taken this long-term approach, being like, what is the end state? If we have billions of people and hundreds of millions of businesses moving assets around globally on our network, what would that network need to look like?
Right.
And as long as you've got the roadmap of how you do that, you can build a tall building. You can't go and build a 50-story building and then go, hey, I want to add 40 more stories, but I need to change the foundations without knocking the building down.
So you guys really need to pick your building blocks that you're going to use, right? That you got to have foresight, because if you're like, all right, you know what, look, like I'm going to build this template out of Legos, right? And then some other guy comes in and he's like, I'm going to add mega blocks to this thing. They don't fit, right? And you got to duct tape it.
Yep.
And so if you do that, right, it's not going to be as cohesive.
And that's what everyone else is doing. Everyone else is literally doing that. They're being like, hey, that mega blocks piece is really good. I'd love to use that. I'm like, oh, I'll duct tape it on.
Yeah.
It's like, yeah, you've made it slightly better. You can now add some mega blocks to that bit, but got to hope that duct tape works really well. And every time you want to make them work together, more duct tape, more other pieces, it's not going to be a stable structure in the grand scheme of things. And this is still, as I say, we're so early in the space. Like the numbers sound really big, but at its peak, like DeFi was about $220 billion, which sounds massive. But the global financial system is about $400 trillion, not including derivatives. So at that point, you're like, it's like looking at anyone who remembers the good old 90s days of the internet, going on like CompuServe or AOL and being like, this is it. It's like you couldn't even imagine YouTube or Twitch or watching live right now because it seemed too far off.
Yeah, no, and I mean, even going back to the video game thing, right? Like you had like the little spaceship man going around in like the 70s, right? And then like it wasn't until like N64 came out, like and like blew the world up, like back in like 94 or something like that, like
it's insane.
Yeah, and then you had your runs of like your PlayStations and your Super Nintendo, right, or whatever, right, starting to kind of go. But I feel like that like N64 system was like the one that really put like everything on the map, and just like then the PlayStation started everything started getting better and better and better.
It reached the point where and you reach that point where the downsides of the technology are minimized to the point that it's at least as good in many other ways, but radically better in so many others. And that's when you get adoption. And like smartphones are the same thing. Like who remembers like Palm Pilots or the old touchscreen Dell handheld PCs and stuff like that? Like the components of an iPhone were there. Like there was nothing about an iPhone that was really like, wow, that is a revolutionary single bit of technology that makes it massive, gives it mass appeal. What the iPhone did was just look at a lot of the concepts and the ways people utilize this. And we're like, what do users actually need to make this make sense? And even then, when it came out, few people remember that the original iPhone didn't have an app store. That was something added later. I remember the first time I saw a custom app, it was the beer drinking app. And I love this as an example because that didn't serve any benefit. People bought it. I remember someone like, oh, launch me drink a beer on my phone. And that sparked that quick moment of like, hey, I've got an idea for an app that uses that gyroscope technology because I've seen something. It's not that useful. It's a demo, but I can use that in a cool way. And like the N64 and stuff like that did that as well. They're like, oh, I can see some of these things. What do we need to do? More recently in gaming, things like the Quest 2 headset has done that for VR. Of like, it suddenly got to the point where you don't need $1,000 headset and a $2,000 PC to play one or two games that cost a whole bunch of money.
Sure.
Facebook hit the right price point, the right convenience, the right usability. And in the space of what seems like a year or two, has changed the profile of like virtual reality up by orders of magnitude. And this always happens. And going back to what you said about, are we taking what others have done, like Bitcoin with a blockchain, making that kind of understandable, Ethereum with smart contracts, the concept, yeah. But the way I describe it is like you're building on the shoulders of giants. And so one we always like using at Radex is the example of the Wright brothers' first flight. It was incredible. It was a monumental achievement for all of human like history. We achieved flight. But you don't fly from New York to London on a plane that looks like the Wright brothers.
Yeah, for sure.
It required not only lots of little improvements, but like the jet engine was one of the major things. And like until you get these engines are a common theme, but like engines really make a big difference to things because it suddenly gives a power to a lot of people to create a lot of innovation in different ways.
So essentially, you guys have basically said, okay, we get what you did, Mr. Satoshi Nakamoto, like, whoever you are, right? We understand what you were trying to do. And that was brilliant. Like putting this concept together, proving the concept, right? And because of that, right, who knows what's going to happen with Bitcoin. You know, a lot of people using it as a store of value today, and just think that it's never going to go anywhere. It's the first, right? The major adopter. I remember doing a thesis paper in 2014 on Bitcoin. I didn't.
That was early days.
Early days. It was $214,
Yep.
and I didn't buy any. It was stupidest. Second biggest regret of my life. So
don't worry, hindsight's 2020. Lots of people
always,
didn't buy Apple
always.
at its bottom either.
So, you know, but so you guys are basically taking the concept now. You're like, all right, cool. And you're taking the Ethereum concept now. You're like, all right, cool. Like, we're going to add these to this thing, but we're going to build them with a better technology. So then let me ask you this. The rate that technology, right, is increasing, right? And the ability to kind of adapt and tweak and, you know, essentially create new technologies based off the concept, right, has been accelerating for years. You got, you know, your guys, you know, parabolic curve, right? I can't remember the dude's name, but, you know, every technology doubles every, you know, 7 years.
Moore's law.
Yeah, Moore's law, right? And then, so like, how is that the actual tech being like on this parabolic exponential curve changing how quickly you guys are able to adapt new technologies, bring them to market quicker? Are we gonna take, you know, what 2009, right? It came out. So we're almost 15, what year are we in? 2000 and almost 23. So it's taken what, 12 years so far for it to get to this point? Mm-hmm. Do you see it being another 12 years before it's mass adoption? Like how is the technology curve and your ability to, you know, to take new tech and integrate it into society, like changing based upon this idea that we have all this stuff now?
So really good question. How you get mass adoption is partly due to technology and partly used to use case. So when technology's adoption, prime example, like the iPhone, is before the iPhone, it feels like it took a long time for technology to get to the point where all the components of an iPhone were done, but they weren't combined together. And then someone combined them all together, Apple in this case, and were like, the iPhone was desirable. People wanted to have an iPhone. They understood why it'd be useful, and it served real world benefits. Still didn't have the App Store and all the great stuff there, but you could see where it was going. And I remember still when you sit there and go, well, 10 years later, they were like, oh, it's 10 years since the iPhone. And I remember being staggered at that as like a moment of the future for me, because I was in that golden age of seeing the first iPhone, realizing what it was. And then 10 years later, I'm like, it must be more than 10 years. Literally everybody I know has a smartphone now. If someone came out and was like, oh, I don't have a smartphone, you'd be like, what? That's weird. Yeah. In the space of 10 years. And so to me, it's you hit that critical mass moment where you've alleviated basically all the downsides of the past technology. So you're at least as good at what already existed and better in multiple other ways. And so the internet is, again, a bit of a cliched, but a prime example of this. The internet didn't destroy newspapers in the sense that you would expect. It just gave a much better way to consume online media, both written and video in this case, that was just impossible with paper formats. But people were still there back when the internet or the dot-com bubble was starting, being like, why would I want the internet? And people would be like, well, so you can read your newspaper anywhere you are. And they're like, yeah, but I can read my newspaper anywhere I am. It's in my bag. Like, yeah, you can phone anyone. Oh, but I can call anyone from my phone. It's like, no, it's not about any of these individual things. It's all of them. So when we say like our mission is at Radix is to give builders everything they need to obsolete traditional finance, we don't mean that that's like HSBC or Citigroup are necessarily going to cease to exist overnight. They'll probably start using DeFi things in reality. What we mean by that is decentralized finance isn't, I wouldn't say finance today is broken. I would say finance today could just be better in 1,000 different ways. And any single one of those ways isn't revolutionary, but the sum of them is great. So I like using the example of like mortgage chains. How much would you like to be able to have a mortgage chain and you do handover day and not have to have each with your own lawyer and wait for the phone calls to come through, the money's moved and everything else like that. A lot of stress, a lot of time, everything else like that. How much better would it be if that was all done all instantly and all the money moved at once or not at all? Well, that's one of 1,000 ways that Web3 and DeFi can make the financial system better. What about when you send money overseas? It was instant and cheap. Again, another of those 1,000 ways. What if you could use collateral of your stock or art on your wall in a different way? All of these sort of little individual steps on their own may not be enough to get mass adoption. But when you start solving a good chunk of those, you're like, well, this is just better in every way and not worse in any of the ways in terms of our user experience.
Sure. Okay, so let me ask you this.
I think my webcam's frozen. I will try and fix that for you.
Okay, so let me ask you this: where do you think that, with all that being said, right, the Web3, right, the mass adoption, you need an easy interface, right? Especially now, because people are like used to easy, right? If it's not easy, people are gonna be like, "No, I'm not doing that," right? And it's frustrating that, like you said, to use a ledger or something like that, you got to put it under a volcano and get your, all your keys and stamped on a metal plate and stuff like that, right? If you're serious about it. And so, like, how are you guys making it easier for the consumer's interface as well, in order to help with that mass adoption, and how so?
Yeah, so we are, and I apologize, my beautiful virtual background has died, but enjoy the green screen. So the short answer to that is yes. The long answer is we've been working on it for quite a long time. We haven't revealed details, but good news, we're about to. So on the 8th of December, we're doing a really big keynote event that's all being streamed live called RadFi. If you go to radxdlt.com, you'll find all the details there. But a big part of RadFi is showing what we've been working on user experience, so that people like our friends, our family, and our colleagues can actually utilize this technology in a real way, just in the same way that it took a long time to get the usability of smartphones to the point that your grandparents can use them. Like, the BlackBerry was a powerful tool, but it was only used by a small group of people in business or tech businessmen, things like your grandparents weren't going to use it. Nowadays, smartphones, they do, because it solves enough problems in a usable way. And we're showing all of that on December 8th at RadFi.
So get your RadFi, get your RDX tokens now. Essentially. Okay, cool. So let me ask you this. This is a tax show. So when you guys are, when you exited your first company, did you have a large capital gains tax on that?
So I'm British. So we have a couple of nice instruments there. So we have something called the Enterprise Investment Scheme. I'm not sure if you're familiar with that, but that's a way that people who work in startups, especially tech startups, quite commonly can minimize or reduce the amount of capital gains tax that they do. But a lot of that is to do, like, it's a complex system. Sure. But that's the long answer. The short answer is yes, paid your lot of tax.
Yeah, no, absolutely. Cool. One of the things that we got going on here, if you're in the United States, what's the coin called that you guys have?
So the Radix native token is called XRD.
XRD.
So just XRD. Yes. And that is similar to like Ethereum. So in the same way as Ethereum is used to pay transaction fees on the network, can be used as collateral within the system, is used now to stake, to secure the network. XRD is exactly the same as that.
What's it trading at right now?
I think at the moment, off the back of FTX, it's currently at about 3.3 cents.
3.3 cents.
Okay. And that puts it at about a $400 million market cap. Okay.
So you guys are still ramping and going from there. Are you guys thinking that the token will be, a massive, $3,000-$4,000 price per coin, where it's divided into the 8th decimal? Or are you guys, like kind of like the Bitcoin, or are you guys trying to keep it more of a coin with a larger supply to keep the price of it more accessible, where it's more like a stable coin type of thing, if you will, where people can, transact with it and that type of thing? What's the vision for that?
So XRD, as I said, it's the native asset of the network. So it's not meant to be a stable coin or anything like that. It's a volatile asset that's freely traded on market. Our goal specifically is to just increase usage of the network. So to use the network, you need XRD. To stake the network, you need XRD. And as you see with Ethereum and things like that, they're often used within the ecosystems that exist on that network. The other thing about XRD, though, is it's a finite supply token. So it has a total supply and a maximum supply. So currently its total supply, there are some reserves that are locked up basically indefinitely. It's 12 billion total supply. Over 40 years, that'll increase to a maximum of 24 billion.
Okay.
So, and at that point, and that's, again, the way that works, just to explain it for people who don't know, in proof of stake, it's very common that when you stake to secure the network emits new tokens, and those tokens are distributed proportionally based on how much you've staked.
And that is a DeFi platform, correct? So there's no chance of like an FTX happening with your Radix.
Yeah, in the same, if you're holding in your own wallet, so if you're holding in your Radix wallet, or ideally with a ledger, I'd suggest anyone who has more than a couple of $100 get something like a ledger hardware wallet. It's totally worth it. Yeah, it is completely decentralized. So the Radix network is in the first version of our mainnet went live last summer. Since then, it's on about 1 million transactions. It's had 0 downtime. And that entire time, it's fully decentralized. So we, as a developer of the network, we don't have any control over who runs it, who operates it. It's purely done by nodes. Say, hey, I'm going to run the Radix software, basically, called the Radix node software. They then act as like one of the validators. And then people who hold XRD can delegate their stake to those validators, as many as they want, to decide which ones participate in consensus and basically decide what's true or not. And so that is already run by the protocol level limited to 100 validators at the moment. That increases to infinity later. But right now it's 100. And all those 100 are operated by different entities, different individuals, and all of your tokens are held in your own account.
Awesome. Cool. All right. Well, I have taken up a ton of your time. So these are supposed to be like,
it's been a really fun chat.
Yeah, no, absolutely. It's been awesome. So where can people find you?
So myself personally, easiest place is Adam _XRD on Twitter. If you want to find more out about Radix, though, best place to go, radixdlt.com.
radixdlt.com. You can find out more about there. And what exchanges can you buy it on currently, or where can you buy it?
But currently you can buy XRD on Bitfinex, MXC, Gate.io, Sendex, and many others. Go and look at our website. There's a bunch, but those are some good options.
Can you buy it directly from the website?
Not directly, but you can find a link to buy it directly on an exchange.
Okay. And does it integrate with MetaMask?
No. So this is one of the interesting things. So a lot of MetaMask's experiences is because it's reliant on every layer of the stack on Ethereum. So if you, by changing the things to get those benefits, you need a different wallet. So the wallet, again, you can download that from our website. It's our own wallet system.
Okay. But it works with the ledger.
Yes.
Awesome. Mine's supposed to be coming in here any day. Now that whole little FTX thing happened, I was like, nope.
Finally. Yep, there's sometimes silver lining to clouds. And while heart goes out to everyone affected by FTX, like, it was just a further demonstration of why centralized finance is probably something we can improve upon.
Yeah, no, absolutely. Did Radix have any exposure to FTX?
Thankfully not.
Awesome. Cool. All right. Well, Adam, thank you so much for coming on. Guys, if you want more information, radixdlt.com. Go check that out. Or follow Adam on Twitter. It was Adam _
XRD.
Nice and XRD. Simple. Awesome. Thank you so much for your time, man. Any final words?
Just thank you very much for having me. And if anyone's got any questions, I'd happily answer them.
Yeah, awesome. Thanks so much for coming on, guys. And thanks so much for listening to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and their professional teams struggle to find great capital gains tax deferral options. Not having a clear plan is the enemy. Using proven tax deferral strategies such as the Deferred Sales Trust, the best way to exit highly appreciated assets, such as your crypto, your businesses, your primary homes, your commercial real estate, investment real estate, resources even. Best way to exit highly appreciated assets, tax deferred, so you can create, preserve, grow your wealth, and invest in solid companies that will give you returns. So thanks so much for listening. Again, please rate, review, subscribe. It really helps us out, and we will catch you on the next one.